If you're tired of placing yourself in traps, meaning you're placing trades and watching the price take you out, take out your stop loss, and then moving away, then watch this video till the end. The sauce is gonna be incredible, and I got some surprises for you as well. Now, when you're trading, you gotta define your bias. And in order to define the bias of EURUSD, for example, the influence on euro is super small. So majority of the influence on EU is gonna come from the dollar. And how do you determine the bias for the dollar? You use DXY. Now, if we look at DXY, what we can see in this first instance is that we're bearish, correct? And so let's always go to higher time frames. And with higher time frames, you can see, well, we're bearish like since the start of the year. And with the higher time frames, you can see that we just took out inducement. Right? We trade liquidity, so we can buy or sell in any trade. We just took out this inducement. We're making efficiency with price right here as well. All right. Now, the way we calculate bias is that we're looking at where the trend is, we're repairing liquidity, and repairing if the price is efficient or not efficient. In this case, right, we're making an efficiency right here with price, with this whole block, and we're taking out this inducement right here that people might have used as an order block, for example. So there's liquidity underneath. All right. On the other side, I see efficiency here. So what you want to do is repair liquidity on both sides. You want to see liquidity get taken on one side and getting liquidity on your favor to the trade, to the direction you trying to trade. If we go even lower, you can see we took out a cause, and whilst we took out liquidity and we're going for another liquidity, which is this inducement, okay, which is this inducement with the efficiency right here. While we take out one liquidity to look for another, we're also building liquidity in the meantime. All right, so right here we have a trend line. So what's to say price continues his journey to the upside, takes out this liquidity, comes to the efficiency, and then goes lower to continue his downtrend, but also to take out all this trend line, which people might be trading. Okay? So, knowing that DXY will probably go up, let's look at EU. So with EU, the chart looks completely different, but you can see we have some efficiency right here. All right, so we're expecting the DXY to go higher. So if the DXY will go higher, the euro will go lower. All right, because this is euro against the dollar. So if the dollar goes higher in value, the euro goes down. Okay? And here, same case, where we had the trend line on DXY below, in EU we have it higher, which is perfect. It matches our vision. Can I just, okay, put this in a different color? And so we're also taking inducements right here. We have efficiency right here, but there's also this one below. Okay? And if you also want to, there's also this order block that isn't so normal, all right, because this order block was when price was breaking higher and people looking at this, all right, because this, it's complex, guys, but if you can manage to understand this, price was going higher, okay, people placing their orders around this order block because they think price will move in higher highs, higher lows, higher highs and higher lows, and it's that simple. It is not. So here they get trapped, and then price goes up. As soon as it goes up, it goes without strength. All right, and because it just made this wick, it didn't close with a body above. And once people also see this, because this is also good for them, because this low took out liquidity and then it went higher, this also looks good for them. It might also look good for some guys that trade my strategy. Personally, I wouldn't trade this because it was news. Alright, it was crazy. So it also came to take out this liquidity. Sometimes it likes to take twice. Sometimes the traps are limitless. Alright, not limitless, but there's a lot. So, in a sense, we got the low that took liquidity also get taken out. And then you got the correct breaker structure, which was with some confidence candles to the upside. And now you have your order block right here, taking just the wick. All right, you can take it, you can refine it just to the wick. It's still enormous. So yeah, we got the efficiency right here. And we're looking for price to go down as the DXY will go higher if our predictions are correct. So right here, let's see, we're coming to the start of February 19. So this is recent, guys. All right, we go down in London session. And as we go down, we're breaking structure. Same for the XY. All right, absolutely the same for the XY. And so we just broke this inducement right here, this false high, making filling up this FVG, this imbalance on higher time frames. All right, and now as price took liquidity, you're gonna see price giving out a breaker structure. And if you're looking for this, you're absolutely correct. But there's a catch. All right, the catch is that, and even here you can see how we're doing the same thing as the XY, to the opposite, of course. You gotta invert the charts. The catch is that there's our efficiency just below. So there, the price isn't efficient enough still. So we took out the liquidity, but we still haven't tapped the efficiency. And guess what? We haven't still made a smart money trap. So what price will do is that here it will give you some reaction telling people, yeah, get in, get in, get in, get in, get in. Meanwhile, creating more liquidity to place themselves, for people to place themselves. Coming here to the efficiency as well of this area. And then what you can see is that we're taking also liquidity around here. And as we took liquidity right here, notice how our price is super fractal. Like we're looking for a smart money trap, on the larger scale, on the 15-minute, 5-minute or whatnot in here. But notice how, in this case, on the 1 minute, on the 3 minute, we're breaking structure right here to the lower side as soon as we make efficiency. But this whole area became a trap. Then price is retesting, coming lower, incentivize more people to get in. At the same time, it's building massive liquidity around here. And as it takes so much liquidity, it begins to make another smart money trap, because this is the same case. It takes liquidity out, but calm down, because other people are also watching it. All right, so in here we took out the support and resistance traders. In here we took out the smart money traders. And now guess what? If everybody's out, now maybe you can look to place yourself. because if this was a trap, this will also become a trap, but I'm explaining you that better. Now, in here, you could have maybe just gotten a small little profit, but this is not the position we want to look at, all right? Because now we know price is going lower. But as price goes lower, now we did the whole trap cycle. Not the whole trap cycle, but a part of it, and we're in our zone. So, because this was a trap, now we're looking for this to become a trap. And why that is because they were right all along when they tried to long themselves here. But now that this high took this liquidity out and the price is going lower, like I said previously, how they think price moves from higher highs, lower lows, higher highs, higher lows, and lower lows and lower highs. So if I draw that to you, it will look something like this. They think price will move like this, when it doesn't. So they were right all along, and now they will be completely off on this kind of area. So in here, they got trapped for trying to long, and now they're going to get trapped by shorting. And I'm confident of that because here, first of all, we just made the whole smart money trap here. Just made a smart money trap here where we took out the liquidity, we made incentivize people to come in and then trap them with a sell to buy, a good indication that we going higher because we sold impulsively and our price is going to react from it, and like impulsively as well. And if you look at DXY, it's the same story. It's the same story. Here, break a structure, trap, right? Trapping everybody that's placing themselves around here, and still got the efficiency. So in here, we're not yet at the efficiency, while in EU, we already at it. But we also got our order block below. So maybe price will go to our order block. Maybe we can refine it even more. But let's see. Let's see what price gives us. Okay. So price has continued to go lower. So as it hit its efficiency on DXY. Let me see. It probably has in here. You can probably count this one as well. Also, because I'm noticing this inducement right here on higher time frames. You can take out this one, but also on higher time frames is always more prevalent. You got this imbalance right here and price taking this out. So right now we're super close to it, and we already did it on EU. So sometimes you can't have everything perfect, but sometimes it's good to see it. And then so we're coming lower, making a double sweep, and now now we're coming to the order block. What's DXY saying? DXY has finally taken the EPA. So right now price is efficient with DXY, and I took this inducement. And so I was saying that it doesn't look everything perfect, but in fact it does. In fact it does because it touched it. So right now, and we're watching EU touch the order block. So as soon as we take the order block right now, I'm expecting some breakage structure to the upside. And here you can have your break a block, all right, if you want a conservative position, you can wait for the price to break this order block. If you want something more aggressive, you could have maybe taken the position while you had this, or use the inducement right here, because price is forming new highs while it's not taking liquidity. So this hasn't took liquidity, so you can maybe use it to your advantage. Place yourself right here, stop loss under the low, see if price tags it, and target the next liquidity. So either the trap for a 5R or the trend line or the previous daily high. Now you're being a bit too greedy, but for 8R, 5R, you can definitely get it. So in here, let's say you target for a 5R. All right, fucking hell. So let's see. All right. And now let's say if price breaks this, you would place yourself on stop order, on aggressive, and possibly target the highs right here for at least a 3R. All right, so you're in both positions. Up. And now let's see what price does. Okay. Okay, as you can see, just broke the trap. We just broke the trap, and while we broke the trap, there's also still the trend line. So the high that took out the trap is gonna get also taken, because everybody's seeing this, and he took it with a buy to sell. And before he took, he gave you some reaction to incentivize you to the trade. So it's not just that you know or don't know how to read the traps, is that perhaps sometimes you know, but just because of these small reactions that price gives you to the downside or to the upside, regardless if it's a supply or demand, it's what makes you take the trade. It's what incentivizes you in. So you gotta be patient, because you're already patient to wait for your zone. You're not just patient in seeing the exact setup, seeing the exact smart money trap getting executed in order for you to place yourself in a good setup. Because in backtesting it's cool to wait, but in live markets, once price is here and coming to your area, all right, sorry, not here, because here you'd be placing yourself in a smart money trap. But even if you place smart money, for example, in here, all right, you waited for the trap to get taken. Now you see some reaction. It's that. And now perhaps you could have been shorting. The thing is, like, you have a whole trend line, and this will also become a trap in higher frame, because this also took no liquidity. It just came to mitigate this. But let's look at DXY. What is DXY saying? DXY just took out the trend line. And I think in here it's not being shown, but there's a big gap here. There was a big gap here, if I'm not mistaken, in live markets. So if in here there's a gap, that means price has to come fill it on the XY. And if it has to fill it, it has to come lower. So if the XY is going lower, it means that EU will continue to go higher. All right? And because this looks too basic, it's also basically a trap. So in here, you got your take profit on the small stop loss position. And perhaps you still got your other one running. And as you can see, price will take them both. So hey guys, if, I don't know why this is still, Oh, is this good or not? Well, fuck it. And check out DXY. It's also come to just follow the order flow. Meaning, it was going lower. It came to retrace to mitigate this block with the efficiency right here, the key level. And it went back down to follow its order flow to the downside. So this is what I teach guys, to read liquidity. And if you go to my channel, you'll find a bunch of videos with this kind of free sauce where you can learn a lot of things. Now, if you want to take the faster road and learn with me personally, I do one-on-one mentoring and I can get you to profitability really quick because it's all personalized. It's all made for you, to your experience, to your trading difficulties. And I still reply to And so, if you want to send me a message to work personally with me, I reply to all my messages, and follow me on Instagram. Even if you do not want to work with me, follow me on Instagram because I'm dropping some trading sauce over there, and you can maybe watch some lifestyle of the boy. And I hope you guys like this video. Leave a like, subscribe, and peace out, boys.